You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome to Volatility Views and this special midweek conference edition of Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-expanding, ever-exciting Options Insider Radio Network. 14 programs on the old network for you guys to choose from these days, including our most recent edition this week in Futures Options. As the name implies, we break down all of the fun, interesting activity in the world of futures options every Friday, and it goes live. We stream it live every Friday, and then it goes out on the network on Monday. So check it out if you haven't done so already, wherever you find your favorite Options Insider Radio Network programming, including iTunes, TuneIn, Stitcher, and of course, our website, the mothership, the flagship, theoptionsinsider.com. And like I said, a special conference edition because we're coming to you from the the 2016 Options Industry Conference here in sunny and scenic Los Angeles. And I am joined for this special midweek edition by my typical cohort, who also had the difficult duty this week of coming all the way out to the lovely Southern California coastline here to join me for some conferencing. Mr. Russell Rhoads, he of corner office fame / infamy. Russell, welcome back to the Volatility Views program, sir.
I am thrilled to be here, although I was woken up from a nap in the sun here in Southern California to come speak with you.
That was us. We had to put you to work. Someone had to put you to work out here. And we're here for the Options Industry Conference. What are you out here? You're actually out here for a different conference, Russell.
Yep. There is a financial advisors conference that the OIC runs concurrently in the same space because there are some people that attend both. And the conference I'm going to be, the part of the conference that I'm here for, runs just Thursday. It's one full day. Stephen Sears is on the list of people that are going to be presenting. I'm actually going to be running a panel right after lunch. It's going to be kind of a fun panel to wake people up, and it's the election season and potential market volatility. And we actually have a political commentator from the San Diego Fox station, Laura Fink, who is going to kind of give us a rundown of where we are with the election. One of the things I've asked her to do is kind of run through the calendar, because a lot traders are interested in the calendar and what the next event's going to be. And we've got the two conventions back to back in late July. And then, we've got kind of a lull period until Labor Day. And then after Labor Day up until the first week in November, it's going to be pretty hectic. So she's going to just talk about the progression of things, where she sees things going, if there are any wild cards that people aren't picking up on. And then we've got a couple of people on the money management side, a sell side and a buy side guy, who are just going to talk about, how both of whom are heavily involved in option writing strategies. Now they're just going to talk about how they handle, known unknowns within broad-based market volatility, such as how the market might anticipate or react to whatever happens election-wise.
All right, and with the gang partially assembled, at least, we're going to dive right on into our abbreviated midweek volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
And welcome to the Volatility Review. Like the name implies, this is the portion of the show where typically we break down the week that was from a volatility perspective. As we're recording this here, middle of the week, so Wednesday, May 11th, a little bit different perspective on the old Vol Review today. As we are recording this, the market's just closed out there, and we're looking at a pretty pronounced sell-off across the board. Most of the major indices off about 1%, S&P off exactly 1% on the day, right about 20 handles, and the Qs and the Dow off commensurately on the day as well. Dow off a little bit more. Of course, all that red on the screen means a little bit of green over there in VIX cash land to the tune of about a handle or so to the upside, hovering right around the 1470 or level or so, right out there in VIX land. And Russell, before we get in some specifics in terms of products or indeed even of the earnings stuff, what's caught your eye so far this week in this very truncated week we've had so far from a volatility perspective?
Well, VIX is not above 15. It's not even close to 16, which I think is going to be our over-under for high-low going forward for the next year or two. I just think that's the kind of regime that we're going into. So despite 1+% sell-off in all the broad-based market indexes, VIX is at relatively low levels. Now, what's not at a relatively low level, and something we've talked about before, is VVIX. It popped back above 90, which is during the low volatility regime, 60s and 70s were pretty much a common level for VVIX. And when you see the pop in VVIX with the market selling off, that's an indication, I think, that somebody's coming in, or some people are coming in and looking for a little bit of tail risk protection. So maybe not everybody is already prepared for some sort of sell-off.
Yeah, you're right. I'm looking at it right now. VVIX hovering today at the end of the day right around a 91.5 actually. So we're getting back into those lofty areas we saw not that long ago, where it was flirting with levels over 100. VVIX obviously being the volatility of volatility, actually the volatility of VIX. I know a bit of an obtuse concept for some people out there to wrap their brains around, but an interesting thing nonetheless. Yes, VIX does have a volatility, and sometimes it gets pretty volatile, and we're starting to creep into that territory right now. Of course, one of the things that's been dragging down the market a bit today, Russell, and has been causing a little bit of this volatility we've been seeing out there is some of the weight from good old Disney. We are still in the kind of the waning off part of earnings season now. A lot of the big names have already come out. We've talked about them on previous episodes of the show, the Googs, the Apples, the Facebooks, etc., the Teslas, all the crazy names a lot of people like to watch. And for the most part, a lot of them actually tended to outperform from a volatility earnings perspective. A few of them recently being the notable exceptions to that fact. So we don't have the full trend yet on earnings season. It seemed like it was shaping up to be kind of a premium buyer's paradise. Then the last few weeks maybe have shaken people of that view a little bit. But we did see a decent sell-off today, driven partially, Russell, by what's going on out there in the House of Mouse. We are not that far, actually about an hour away from Disneyland here as we sit right now. And even though the parks are doing well, and Civil War, have you seen it, Russell? Great movie. Have you seen Captain America Civil War, the new Marvel movie out there?
I have not.
You have not? All right. Well, I was going to give you a chance. We're going to do some deep spoilers now, so I'm going to ruin the show for you.
Go right ahead.
But of course, that movie tearing it up at the box office, Jungle Book doing well. A lot of their divisions firing off, but apparently the looming specter of the slow decline of ESPN is weighing on Disney. Their earnings coming in yesterday and not pleasing the street, shall we say, off closing today right around the 102.30 level, off about 4% intraday here. And Russell, you were looking at some past numbers out of Disney, and you were saying this is a little bit elevated in terms of a movement, but not that extreme compared to what we've seen recently out of Disney. Is that your take?
Yeah, and actually I was looking at the intraday action because I'm talking to you after the close on Wednesday, and I think, I'm trying to think of how to phrase this so it doesn't sound like a recommendation, but if I were a holder of Disney and I saw how the stock reacted today, with the stock basically selling off right off the open, and then it's just kind of worked its way higher throughout the rest of the day, while the broader market tended to work its way lower throughout the day. So the relative strength of that thing midday, actually, if you try to put a silver lining on the cloud that was Disney today, I can give you that. Now, on average, the stock drops, or the stock moves up or down about 3% off of earnings. It did drop about 4% last quarter, so it just matched that one. We've had bigger moves, but really, on average, this is not so far outside of the realm of. It's not a headline-grabbing drop. It's just a little bit. Maybe it's just like you said that ESPN is a little bit of a slow bleed, and the stock's taking it the same way. It's not reacting dramatically. It's just kind of easing its way lower on this earnings announcement, just like it did 3 months ago.
I think it's kind of hard for people to wrap their heads around, such dire news from Disney when all the other prevailing headlines of that company are so bullish. Their movies are lighting it up, the parks are lighting it up, the merchandising and the Star Wars lit it up, and so everything that they see public facing for the most part, with the exception of that one big specter of the ESPN, is knocking it out of the park, literally in the sense of the parks. So it's kind of hard maybe some people to kind of justify those two juxtaposing things of everything else is really doing well except for this one kind of key area, and then of course the analysis then becomes how do you weigh one against the other, which one is the biggest driving factor, and going forward, which is going to be not just what it is now, but going forward, what's going to be one of the bigger factors. Is ESPN maybe that part of the it being the driving factor, maybe that's sunsetting, and maybe these other things can take over. So it's been interesting to watch that. It's kind of one of the bigger names we've had for earnings this week. Anything else catching your eye from an earnings volatility this week? Maybe forthcoming as well, Russell?
As far as forthcoming, we don't really. I mean, we're coming finally to the end of earnings season, or at least the traditional calendar quarter companies. Shake Shack,
market mover that is Shake Shack.
Thursday after the close.
Wither Shake Shack, so goes the market. That's what I say all the time.
Well, what will be interesting is we don't have. I really only like to work with stocks that we have a full 3 years of history on. But Shake Shack, on average, for the few quarters that we have, has moved up or down by about a little under 5%. However, it had its biggest drop ever last quarter. It dropped almost 12%. And what I have found, and this goes with saying without looking at the option prices right now, but what I have found is when you have one of these stocks that's a big disaster, the following quarter, the options tend to overprice the move. Traders have short memories, so it'll be interesting to see Thursday after the close what shares of Shake Shack do, and then Friday, how big the volatility crush is if these options are actually overpricing things this time around.
Yeah, speaking of overpricing here, I'm just looking really quickly here at what we were looking for the week to come. Actually, maybe we'll save that for a little bit. We still have a little bit of time here in the show. We'll mock each other forthwith. But before we do that, Russell, I know it's your favorite part of the show, and it certainly is mine. We won't have the joy here because we're doing it live at the conference of hearing your music. We'll just imagine it in our head because it is time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, and the lovely music notwithstanding, this is indeed, I know, Russell's favorite part of the show, and I know a lot of our listeners, they get a good chuckle out of it as well, Mr. Russell. So the floor is yours. I know we're already just only partway through the week, so we haven't seen the full week's breadth of activity yet, but so far, anything on your radar really lighten it up from a weekly VIX options perspective?
Well, This is as tough a moment as I could possibly have to try and talk about this. How's that for an excuse? Because today we had the May 11th options go off the board on the open this morning. May 18th, the standard expiration. So if you're doing a short-term trade, you're actually trading the standard options right now.
Rise of the Wednesday weeklies.
Yeah. Going out a little bit, it does look like somebody was taking a look at the May 25th, the 22 strike calls today, at about 4,470 of those traded, and it looks like I'm pretty certain that they were actually selling these things and then going out and buying the May 25th. So they're just the May 25th 25s, and I'm struggling to get the premiums while we're talking right now. But it looks like we had It looks like they were taking a short position in the 22s and a long position in the 25s, and maybe taking in a dime for that. You know, a couple of weeks out, VIX hadn't been doing a whole lot, but that's the closest thing to a significant trade I can find in the weeklies right now. Just something else along the lines of the weeklies was I got a call from a reporter this morning about.
This is part of the ongoing Russell media inquiry sentiment gauge.
Yeah. Well, and I thought about it relative to talking to you this afternoon, and she was asking me why is VXX so much more successful than there are two or three other funds that do the exact same thing as VXX, and it's because they have weekly options. I'm sorry, they were the first mover, but VXX, UVXY, and SVXY all have weekly options. And that just, I think that, and those are the three most actively traded funds based on volatility. And I think it's just another, I don't know, notch in the proof belt or something like that, that having options on an instrument actually increases the liquidity in the instrument as well.
I think the ongoing and continued success of VXX has always been a little bit of a head scratcher to me. I mean, it is such a product that you think on its surface would be a little bit off-putting or even terrifying to a broad swath, certainly of the retail market, and yet they embrace it in mass. And I'm often left scratching my head when we've talked many times on this show about the myriad problems of buying and holding a product like that and how that's not at all what it was designed. And to their credit, a lot of the broad media has really picked up on that now. We see whenever there's a write-up, I don't care what publication it is, talking about VXX, there's always that one or two explanatory sentences in there of, by the way, this product is disenfranchised by the term structure of VIX futures, blah, 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 something along those lines, which is good to see. They're starting to get the message. But I still wonder, because VXX is growing in volume and market share all the time, and I kind of wonder how much of that audience still really understands exactly what they're getting into. And I have this, I'm sure there's this scenario out there of a lot of your proverbial grandma from Iowa who's got some VXX sitting in her IRA thinking she's long volatility, and meanwhile this thing is just eroding to zero in a heartbeat, or as close to zero as it can get with all those reverse splits. So yeah, I kind of it's been kind of a double-edged sword, the success of VXX. On one hand, I think it's good for the volatility space to have such a resonant product that drives a lot of interest and market share. On the other hand, when it is such a inherently flawed product, everyone knows it. So I think Andrew has called it predictably crappy in the past, which I think is a good description of it, the rock lobster. But still, it's kind of when you have a flawed instrument kind of being the tentpole product in many ways, there are issues inherent with that as well. So it's kind of, you're right, it's kind of a bit of a double-edged sword, Russell, as we see kind of the continued success of this product, head-scratching and bewildering as it may be. Who knows, maybe some of the recent products we talked about, the VX Min or some of these other ones will maybe start to, particularly ones that are focusing on the nearer portion of the curve, maybe that will start to resonate more with the retail and institutional audience, and we'll see some interest in that. We just had one of your colleagues from SIBO on the network not that long ago, and they were just telling us that so much institutional interest from people they're talking to is all in the short part of the curve. You know, it's all in the weeklies. They don't care whether it's VIX or SPX or the new MSCI. Everyone wants short duration. So who knows? Perhaps these new short duration VIX products will steal some of VXX's thunder, and maybe not a bad thing at the end of the day.
It's interesting you say that the institutions are taking a look at the shorter end of the curve. I think they've actually been late to the game on it. If you do like I do and you spend a lot of time looking at the block trading activity in the big trades, at least in the equity option space, the majority of the big trades, when we don't have earnings coming up, tend to be focused on the third Friday standard expiring options. And this was part of the discussion I had about VXX this morning, is the institutions, if they've got something they're doing, if they're selling call options once a month and it's been working for them for a decade, and they would be better served selling weekly call options, what's the risk of switching from what's worked to what might not work, or you feel like you're missing something? So I think that's why we will continue to see volume growth on the shorter end of the expiration cycle, because the institutions are really just starting to look at them.
All right, and that's going to do it for our abbreviated volatility review segment. And now let's dive into a really quick crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, and welcome to the Crystal Ball. This is indeed the portion of the program where Russell dons his craziest of prognosticating glasses. I wish we had video on this one, listeners, because it's interesting and/or disturbing, depending. I can't even look at you, sir, across the table right now. I'll look at my computer instead. This is, of course, the portion of the show where we embarrass ourselves wholeheartedly. Russell, quite literally right now, as we are recording this. I guess because it's midweek, I think I'll give us a chance to. It'll be a rare opportunity, Russell, if we care to adjust. As this time last week, you want to adjust. Okay, hands down, we're not in the classroom.
I have an idea.
Oh, you have an idea?
I have an idea. That's nobody can see this, but I was raising my hand. How about we shoot for May VIX settlement?
Oh, instead of
right now it's Wednesday afternoon.
Maybe we can also bet how many people will be angry, will be outraged by the settlement.
No. Let's how about we shoot for and then we'll know where it is, and you can make all kinds of fun of me next Friday or a week from Friday for being wrong. How about that one? How about we shoot for that one?
Let's do that. That's fun.
I'm the newest guy, and I'm trying to change all the rules.
It. You're mixing it up.
Yeah.
Like I said, we did a crystal ball last week. I was about 14.5, which actually is looking pretty good right now, about 14.70. You were ever the buyer of volatility at about 16. Who knows? By the end of the week, you may be coming in good. So I think I went first on last week. So I'll give you a chance, since it's your idea. You go first on your May VIX settlement guesstimate, sir.
15.27. Well. Didn't you just like how I throw them out?
I was not prepared for that degree of specificity, sir.
15.27. That's remember in Waterboy when Fairuza Balk or whatever, the Lynn Swan asks her, "What's the final score going to be?" It'll be 31-28. They're going to win. She knew it.
Waterboy is a fantastic
15.27.
film. Not cited enough for my liking on this network. Oh, well, that degree of specificity. Let's see. Let's look up where we are right now. Of course, VIX cash, like I said, hovering right around the 1470 level as we're recording. So my crystal ball here, I was looking at 14.5 for the end of the week. I'm going to say, since you're going Mr. Specific, I will go a little more specific as well, and I will say 1470. For our settlement level. I'm still not as bullish overall on vol as you are. Maybe you'll talk me into it as the show continues to progress. When we hit this spike, who knows? The VVIX increasing could be leading to something down the road. Who knows? We'll see. There are some things leaning us that way, but unfortunately, that's all the time we have here on the Crystal Ball segments. Also, all the time we have for this truncated edition of the special conference edition, Russell, of Volatility Views. But before we go, really quickly, what's cooking in your neck of the woods, and what's cooking in the land of all things CBOE and Options Institute?
I will have a book for institutions out in less than 2 weeks. I've got about 3 pages left to write this thing. Read it once, and then it's going to press. So options for advisors and institutions should be out at the very latest by May 30th. And then by August 31st, my next VIX book is going to be out as well. As far as the Institute goes, we've got Investing and Trading for College Students the last week of May, and then we also have a session of that running in August. We've got a beginner class running June 9th and 10th. I know I'm missing. Oh, we've got an institutional and advisors class running in July as well. And then we also have Mark Sebastian that's going to be hosting a conference at the Exchange. And
give my condolences.
He knows a lot more about that than I do, so I will defer to him on that one the next time he's around.
All right, that's going to do it for this episode. And on behalf of Mr. Corner Office and myself, I want to thank all of you for tuning in, and we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.